All right, let's jump into another deep dive. Today, we're going to be tackling Mark Minervini's trading strategies.
Oh, interesting.
Yeah, this guy, he's like a legend, right?
Totally.
In the stock market world.
Yeah.
Known for, racking up some serious wins in the U.S. Investing Championship.
Mm-hmm.
So we've got a stack of his material here.
Cool.
Our mission is to kind of extract those golden nuggets, right?
Yeah.
That you can actually put to use.
Well, what I find really interesting about Minervini is that he doesn't just focus on the technical stuff.
Right.
He goes deep into the psychology of trading,
Okay.
which is something that a lot of people overlook, but arguably just as important as any chart pattern.
So let's unpack that.
Okay.
So Minervini, he talks about this idea of like a builder versus a wrecker mindset.
It's a powerful framework. The builder versus wrecker.
What do you make of that?
The builder is disciplined, methodical, always learning from mistakes. They stay optimistic, knowing that consistent effort, not just luck, is what leads to improvement.
Yeah, that makes a lot of sense.
Yeah.
Who wants to be a wrecker? What does that even look like in the trading world?
Well, the wrecker tends to point fingers when things go wrong.
Right.
They're chasing those quick wins, very ego-driven, rather than having a solid process.
Yeah, I can see how that would be a recipe for disaster, right?
Exactly.
In the market.
Yeah.
Especially where patience and discipline
Absolutely.
are so key. So are we saying that, we all have a bit of builder and wrecker in us?
I think so.
And it's about choosing which one to kind of feed.
It's a daily choice.
Yeah.
And he illustrates this really well with a study about violinists.
Oh, interesting.
Researchers found that the violinists who had practiced 10,000 hours by the time they were 20 consistently rose to the top.
Wow.
It wasn't simply talent. It was dedicated, consistent effort.
That's fascinating.
Yeah.
So how does that connect to trading? Are we saying everyone needs to, clock 10,000 hours before they buy a stock?
Not necessarily.
Okay.
But the takeaway is that consistent effort, refining your process, just like those violinists are key to success in trading. It's not about intuition or, just getting lucky.
So it's about honing your skills over time.
Exactly.
All right. So mindset's crucial. We've established that.
Yeah.
But what's next? Where do we even begin to apply this? How do we actually be a builder in the markets?
Well, he's a big believer in having a detailed trading plan.
Okay.
He constantly emphasizes that trading should be treated like a business,
Right.
not a gamble.
That's a great point.
And every successful business has a plan.
I'm curious, though.
Yeah.
How many people do you think actually go into trading with a solid plan?
You'd be surprised, I think, more than you think.
Really?
But, a lot of people are just kind of winging it.
Yeah.
But Minervini, he lays out the core elements of a good plan.
Okay.
Clear buy signals, position sizing strategies, how you're going to manage risk, or profit-taking rules.
So it's like having a roadmap, right?
Exactly.
For your trades, so you know what to do in any given situation.
That's the idea. And just as important as creating the plan is analyzing your results.
Okay.
That's where data reporting comes in.
Right.
Your plan should be a living document. It should evolve
Got it.
based on what your trades are telling you.
So mindset and a plan.
Yes.
What else is at the core of Minervini's philosophy?
Capital preservation is king.
Okay.
He really prioritizes protecting your capital above all else.
Right.
By limiting losses on each trade, you ultimately safeguard your overall account.
Makes sense. If you blow up your account, game over. Right.
Exactly.
But I imagine there's more to it than just, not losing money.
There's a psychological component as well.
Okay.
Having a plan focused on capital preservation reduces emotional decision-making during trades. When you have a safety net, you're less likely to panic sell or make those impulsive moves.
Less stress, better decisions, and a healthier account balance.
Exactly.
Sounds like a winning combination to me.
Right.
What else does he emphasize?
Let's talk about risk-reward ratio.
Okay.
Imagine someone offers you a coin toss.
Okay.
Heads, you win 10 cents. Tails, you lose a nickel. Would you play?
Definitely. Those are pretty good odds. I'd be
Probably.
flipping that coin all day long.
Exactly. That's Minervini's point.
Okay.
You should always seek trades where the potential reward outweighs the risk.
Right. He's not talking about tiny gains either.
No.
Give us an example of how powerful this can be.
Well, he ran a simulation.
Okay.
Where a simple trading scenario was played out over a year with a negative risk-reward ratio.
Okay.
Meaning you risk more than you can win.
Right.
The average loss was $13,000. But when that ratio flipped positive,
Yeah.
the average gain was over $6,000.
That's huge.
It is.
Just by changing that one ratio. It really highlights the importance of choosing your trades wisely.
Yeah.
But do you have to be right all the time to be successful?
That's where it gets interesting.
Okay.
You don't have to be right on every single trade.
Really?
In fact, he uses a baseball analogy.
Okay, I like this.
He says even with a high strikeout rate,
Right?
you can still win the game if your home runs are powerful enough.
I love that. So it's about finding those high potential trades.
Yes.
The ones that can, like, knock it out of the park.
It's about having a positive expectancy.
Okay.
Basically, it's the mathematical edge that leads to long-term profitability.
Got it.
You can be wrong sometimes,
Right.
as long as your wins are bigger than your losses.
Positive expectancy. I like it.
Yeah.
It's all starting to click.
But
is it always about hitting those home runs?
well, that's where things get even more interesting.
Okay.
He challenges this idea that you need massive gains to be successful.
He believes that consistent smaller returns can actually lead to greater gains overall. Interesting. Thanks to the power of compounding.
Compounding, so that's where your profits are reinvested, right?
Exactly.
To generate even more profits.
Think snowball effect.
Okay.
He compares compounding 10% returns versus 240% returns.
I'm guessing the 240 wins?
Actually, no.
What?
The smaller consistent returns win out in the long run.
Really?
Yeah, it seems counterintuitive,
It does.
but it all comes down to time and opportunity cost.
Okay.
Imagine you put all your capital into one stock, hoping for that 240% return.
Right.
But that stock stays flat for a year.
Okay. Yeah.
You've missed out on 10 other trades that each yield 10%.
Right. Because your capital was locked up.
Exactly.
Wow, I never thought of it that way.
Yeah.
So slow and steady wins the race in the stock market.
It certainly can.
Yeah.
Consistent calculated wins,
Right.
combined with careful risk management, can lead to extraordinary results over time. All right, so far we've got mindset, a solid plan, risk management,
Yep.
the power of compounding.
Yes.
What's next? How does Minervini actually pinpoint those winning trades?
That's where his SEPA strategy comes in.
SEPA, okay.
And it's got a pretty impressive track record.
Oh, yeah.
As of May 2020, 11 of his students were ranked in the top 20
Wow.
of the U.S. Investing Championship.
11 out of 20. That's incredible.
It is.
His methods clearly work.
Yeah.
But what exactly is the SEPA strategy? What's the secret sauce?
The core principle is trading with the trend.
Okay.
Picture a surfer catching a wave.
Right.
That's essentially what we're doing here.
All right.
He calls this identifying stocks in a stage 2 uptrend.
Hold on, stage 2. Are there other stages of an uptrend?
There are actually 4 stages in his model.
Yeah, okay.
Stage 1 is the initial breakout. Stage 3 is where the momentum starts to fade.
Okay.
And stage 4 is the downtrend.
Right.
But he emphasizes that you only want to be buying during stage 2. That's where the real meat of the move happens.
Makes sense, but why is stage 2 so special?
Because over 95%
Wow.
of the biggest stock gains in the past century
Okay.
happened during stage 2 uptrends.
That's a pretty convincing statistic.
Yeah.
All right, so how do we identify this magical stage 2?
Well, he loves using the 200-day moving average,
Okay.
and he's not alone.
Oh, yeah.
Legendary trader Paul Tudor Jones.
Wait, the Paul Tudor Jones?
Yes,
The guy who, like, predicted the 87 crash?
that's him.
Wow.
Considers it his most important trading rule.
No way.
Yeah, he's a big believer in the 200-day moving average.
Huh.
And there's some fascinating analysis that backs it up.
Like what?
A simple buy-sell strategy
Okay.
based on the S&P 500 crossing above and below its 200-day moving average. Almost eliminated periods of drawdown.
Drawdown meaning, like, losses, right?
Exactly. By only being invested
Right.
when the market was trending above its 200-day moving average,
All right, okay,
they were able to sidestep those major losses.
That's amazing. So we're looking for stocks in a stage 2 uptrend.
Yes.
Confirmed by the 200-day moving average.
Exactly. He also looks for a specific chart pattern
Okay.
called the volatility contraction pattern,
All right.
or VCP.
ECP. Okay. I'm intrigued, but that sounds a bit intimidating.
Yeah, it's a mouthful.
Break it down for me. What's a VCP? And how do I spot it?
It's basically a period of consolidation.
Okay.
After the stage 2 uptrend is confirmed, you'll see the stock's price swings get smaller,
Right.
decreasing volatility,
Okay.
and often with reduced volume, meaning less trading activity.
So it's like the stock is taking a breather.
Yeah, gathering energy.
Gathering energy for the next move.
Exactly.
Okay, that makes sense. Do you have an example of this VCP pattern in action?
Take Netflix in 2009.
Yeah.
There was a clear VCP formation on the chart, and what followed?
Yeah.
A massive 525% price surge.
That's a pretty significant return.
Yeah, it was a big one.
What specifically about the VCP pattern in Netflix signaled that kind of move?
That's exactly what we'll unpack in the next part of our deep dive.
All right, I'm hooked. Can't wait to hear more about how to spot those VCP patterns.
Could be good.
We'll be back soon to explore those details, so stay tuned. So last time we were talking about Mark Minervini's SEPA strategy,
Yes.
right, and how he uses that volatility contraction pattern, the VCP. You mentioned Netflix back in 2009.
Yeah.
What exactly were we looking at on that chart?
Okay, so with the VCP, you're looking for that sweet spot where the stock consolidates
Right.
after a stage 2 uptrend.
Right.
The price swings, they kind of tighten up. Volume often decreases.
Right.
It's like the stock is taking a pause.
Yeah.
You know?
Like it's almost like spotting a spring being compressed.
Right, exactly.
You know, that there's potential energy building up for a powerful release.
Yeah.
But just seeing that pause in price action isn't enough, right?
No.
What else are we looking for to confirm a VCP setup?
So Minervini, he combines the VCP with other tools, you know,
Okay.
to identify those high probability trades. One of his go-tos is looking at relative strength.
Okay.
Basically, how a stock is performing
Right.
compared to the overall market. He wants to see stocks that are outperforming,
Makes sense.
showing that they have like that extra oomph.
Right. We want to ride the strongest waves.
Yeah, exactly.
Not get stuck in the
choppy water.
choppy waters. Yeah.
Yeah.
But how do we measure relative strength?
Right.
It's not like there's a meter on the stock chart.
Well, there are tools for that.
Okay.
Minervini, he uses the RS rating,
Okay.
which ranks stocks based on their price performance relative to all other stocks in the market.
Right.
So a higher RS rating
Yeah.
means the stock is a stronger performer.
Okay.
He typically looks for stocks with an RS rating of 80 or higher,
Yeah.
which puts them in the top 20% of performers.
Okay, so high RS rating, check
Yeah.
anything else on his kind of checklist before he hits that buy button.
Yeah, he's also big on fundamentals.
Okay.
You know, strong earnings and sales growth are key.
Makes sense. We want companies
Got it.
with real substance behind them, not just chasing momentum.
Right?
How does he actually analyze those fundamentals?
Well, he uses a specific formula
Okay.
to analyze earnings and sales growth,
Right.
looking for consistent accelerating trends.
So he wants to see that upward trajectory.
Yes, exactly.
All right, so we've got the relative strength, solid earnings and sales.
Yeah.
But let's be honest, charts can be a little intimidating.
Yeah.
What's his approach to reading those charts and pinpointing those entry points?
He's very systematic about it.
Okay.
He uses a combination of price patterns, indicators, and volume analysis.
To identify those buy and sell signals,
Yes.
can you give me a concrete example? Something I can actually picture on a chart.
Okay, one classic pattern that he looks for
Yeah.
is the cup and handle formation.
Cup and handle.
I know.
That sounds more like a
I know.
coffee break
It does, right?
than a stock chart.
Yeah, but it's a bullish signal
Okay.
that often precedes big price moves.
All right.
So the cup part is that rounded bottom on the chart,
Okay.
and then you get a shorter pullback
Right.
that forms the handle.
So the stock takes a breather,
Yep.
builds up energy,
Gathers energy.
and then bam, breaks out.
Exactly. And he looks for specific characteristics in this pattern.
Like what?
The depth of the cup,
Okay.
the angle of the handle. And he also watches for volume confirmation
Oh, volume confirmation.
during the breakout.
What's that all about?
Well, he believes that volume
Yeah.
is a key indicator of conviction.
Okay.
When a stock breaks out of that cup and handle,
Right.
he wants to see a surge in trading activity.
So it's like buyers are putting their money where their mouth is,
Exactly.
showing real interest.
Yes, it's that fuel
Right.
that can really propel a stock upward.
So it's not enough to just see the pattern.
No,
You
right.
need to see that buying frenzy,
Exactly.
pushing it higher.
Yeah.
Okay. Cup and handle, volume confirmation, got it.
Good.
Any other patterns he looks for?
Another one is the flat base pattern.
Flat base.
Yeah, it's a period of consolidation after an uptrend,
Okay.
where the stock kind of trades in a tight range for a while.
Right, like it's taking a pause, building a solid foundation.
Exactly. And again, volume confirmation is key.
Right.
when the stock breaks out above that flat base.
Okay, cup and handle, flat base.
Yeah,
We're building our chart pattern vocabulary here.
we are.
What about indicators? Does he use those as well?
Absolutely. One of his favorites is the moving average divergence indicator.
The MACD?
The MACD.
Okay, now things are getting a little technical.
A little bit, but think of it this way.
Yeah.
The MACD helps you see when momentum is shifting
Okay,
in a stock,
right.
giving you a potential early signal to buy or sell.
So it's like a momentum gauge.
That's a great way to put it.
Okay.
And keep in mind,
Yeah.
he uses the MACD alongside other signals.
Right.
And his overall analysis
It's about connecting the dots.
is
Finding those confirmations
You have it.
to build your confidence in a trade.
exactly. And remember, no indicator is perfect.
Right.
They're just tools
Right.
to help inform your decisions.
This is fascinating. We're really getting a peek inside Minervini's toolbox.
Yeah.
So far, we've got the trend identification,
Right.
chart patterns, indicators. What else is crucial in his strategy?
Let's talk about position sizing.
Okay.
This is a key part of managing risk
Right.
and maximizing your profits.
So figuring out how much money we're actually putting on the line
Exactly.
for each trade.
Yes.
This is where his emphasis on capital preservation really shines. He has a very specific formula,
Right.
taking into account his risk tolerance,
Yes.
the stock's volatility,
Yeah.
and his overall portfolio allocation.
Yeah, it's not just about picking the right stocks.
Right.
It's about managing your money effectively within each trade.
It's all starting to come together.
Good.
Mindset, a solid plan, risk management,
Yep.
trend identification, chart patterns, indicators, position sizing. We're really building a foundation here.
We are.
And we're not done yet.
Well,
Let's dive into
okay.
the often overlooked aspect of trading, the mental game.
All right, let's do it.
Let's talk about mastering those emotions.
Yes.
All right, so we've covered a ton of ground already, right?
We have.
Minervini's approach to finding those winning trades, managing risk,
Yeah.
importance of a solid plan.
Yep.
But now I'm really curious about this mental game you mentioned.
Right.
Something that everyone always talks about.
Yeah.
But it feels kind of intangible, you know? How do we actually master our emotions when like money's on the line?
That's the $1 million question.
Right.
You know, Minervini, he doesn't just pay lip service to this idea.
Okay.
He gives you actual ways to cultivate that mental toughness.
Okay.
One of his key principles
Yeah.
is detaching from the outcome of each individual trade.
Detach from the outcome,
Yeah.
but isn't the whole point of trading to
That's
make
right.
money?
Of course, profits are the goal.
Right.
But getting emotionally invested in every single trade
Yeah.
can lead to those impulsive decisions.
Right.
You start chasing losses or taking profits too early.
Out of fear.
Out of fear.
Right.
Throws your whole plan out the window.
I can see that if you're on that emotional roller coaster,
Yeah.
you're bound to kind of make some bad calls, right?
Exactly.
So Minervini's advice is to focus on the process,
Yes.
not the P&L, the profit and loss statement on every trade.
Exactly.
Execute your plan, manage your risk, and let the profits kind of take care of themselves in the long run.
In the long run, yeah.
So it's about trusting the system you've built,
Yeah.
even when things get a little bumpy.
You got it.
And another big part of this mental game, right, is patience.
Oh, patience is huge.
I have to admit, that's a tough one for me.
It is for everybody.
It's so easy to get caught up in the excitement
Yeah.
and feel like you need to be in on every move.
It's hard to sit on your hands sometimes,
It is.
but the market will always present opportunities.
Right.
You know, it's about being selective,
Right.
waiting for those high probability setups.
The ones that fit our criteria.
Exactly.
Have that potential for those big moves that we talked about.
Yep.
Quality over quantity.
Yes.
Finding those diamonds in the rough.
I like that.
And then once you're in a trade,
Yeah.
Minervini's big on kind of managing your winners.
Managing your winners, very important.
Knowing when to take profits.
Yes.
That's always the big question, right?
It is, yeah.
Let your winners run.
Right, let them run.
But how do you know when to actually take those profits off the table?
Right, well, there's no one-size-fits-all answer.
Right.
But he often uses trailing stops
Okay.
to lock in profits as a stock moves in his favor.
Remind me how trailing stops work.
So basically, it's a dynamic stop-loss order that adjusts as the price of the stock rises.
So it's like a safety net that moves up with the stock,
Exactly.
protecting your profits while still allowing for more upside.
That's the idea.
So you're riding the wave,
Yep.
but you've got that protection in place.
Yeah, just in case things turn south.
Right, and he also uses those technical indicators and chart patterns to identify potential exit points.
Exactly.
The key is to stay disciplined
Yes.
and follow your plan,
Yep.
even when emotions are running high.
Absolutely.
Wow, this has been a whirlwind.
It has.
We've covered so much. Mindset, strategy,
Yeah.
risk management, the mental game. It's like a masterclass in trading.
And the best part is, he's proven these methods work. You know,
Yeah.
his students consistently perform well
Right.
in these trading competitions.
11 out of 20. That's incredible.
It's amazing.
Shows that these principles, they can be applied by anyone
Yeah.
willing to put in the work.
That's the
It's
key.
really inspiring. It shows that with the right knowledge, discipline,
Yeah.
and a bit of that builder mentality we talked about,
Yes.
you know, we can all find success in the market.
Couldn't agree more.
This has been an amazing deep dive
Yeah.
into Mark Minervini's world.
His world, yeah.
Thank you so much for sharing your expertise
My pleasure.
and breaking it all down for us.
Happy to do it.
So for those listening, if you're serious about trading,
Yeah.
you know, take Minervini's advice to heart. Treat it like a business.
Yeah. Treat it like a pet.
Develop that solid plan. Manage your risk like a pro. And don't underestimate the power of mastering those emotions. And never stop learning.
Never stop learning.
Never stop learning, exactly.
Your market is constantly changing.
It is.
And so should you. Keep exploring, keep refining your approach.
Yeah.
You'll be well on your way to success.
You got it.
Here's one final question I'll leave you with.
Okay.
How can you apply these principles? You know,
Yeah.
risk management,
Right.
trend identification,
Yeah.
mental discipline, not just in your trading,
Right.
but in other areas of your life.
The principles of success are often universal.
That's a wrap.
Oh, it is.
We'll be back soon to deep dive into another fascinating topic.
Sounds good.
So stay tuned.